morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the financial results of two of those energy-related stocks listed on the Trinidad and Tobago Stock Exchange. Of course, we're speaking about TTNGL as well as National Enterprises Limited, or NEL. Now, both companies would have reported fairly dismal results for their most recently concluded financial periods. Let's take a look at what they would have reported and what investors might expect in the coming months ahead. Turning firstly to NGL, well, the group would have reported a half-year loss per share in 2025 of 23 cents, which compares starkly to a half-year earnings per share figure of 30 cents per share in that prior comparable period of 2024. Now, take that with a pinch of salt. One of the major weights or attributable factors to this loss was an impairment loss of 85.2 million, which would have taken place in that first half period, which was non-existent in that prior comparable period. And when you take a look at the share of profits from joint venture of its sole investee company, Phoenix Park Gas Processors Limited, or PPGPL, there was an actual improvement in those share of profits from 47.3 million to 50.8 million, a 7.4% increase. Total income ultimately that 7.4% higher. It was that, of course, impairment loss of $85.2 million that would have driven earnings into a loss figure, ultimately with loss after taxation coming in at about 35.8 million compared to that 46.7 million profit in the prior comparable period. Now, when we take a look at the production side of things, and well, the pricing side rather, we can see that with respect to what NGL by its investee company PPGPL produces, natural gas liquids produces, prices would have been broadly resilient over the comparable periods of the half year of 2024 and 2025, with butane in that bluish column relatively stable, propane increasing up just about 6% in that greenish column from 79 cents to 84 cents per gallon, with natural gasoline slipping just about 8% from $1.54 to $1.42 per gallon. When we take a look at the production side of things in terms of production and export, we can see that there was a modest improvement, production improving just a couple thousand barrels from 1.96 million barrels over the available data period of January to April 2024. To 2.01 million barrels in January to April 2025. And similarly, exports actually increased just a bit from 1.75 million barrels in 2024, that period in 2024, to 1.8 million barrels in 2025. Now, of course, one of the main drivers for TTNGL's price action has been the palpable absence of dividends since that fiscal 2023 period. And as we can see here, despite some splotchy dividend performances over the past, well, between fiscal 2019 to fiscal 2022, the company has had a total absence of dividends since then, from fiscal 2023 all the way to current time, which has been almost 3 years. Of course, the company has been restricted from or prohibited from paying a dividend due to legislative restrictions or prohibitions, particularly in the Companies Act. And that can be seen, that impact or absence of dividends can be seen in the share price. Follow the red line. Since its non-declaration of dividends coming forward, the share price has fallen, notwithstanding the challenges that would have been faced in a more difficult energy environment for the domestic economy. That share price has fallen from $18 all the way down to its current trading level of around $2.70 per share, despite, as we can see in its cash per share data in that greenish column, cash per share building from 73 cents at the half-year period of 2023 to 90 cents in the half-year period of 2024, and now $1.15 per share in terms of cash at that half-year period of 2025. Again, with some volatility in earnings, but that cash buildup is fairly evident on the books of TTNGL, and of course, investors will be eagerly awaiting some sort of indication as to if or when TTNGL will be able to pay a dividend. So again, when we take a look at the $1.15 per share, that represents roughly perhaps 30 to 40% of the stock of the relative stock price of TTNGL at this particular point in time. So from a book value perspective, with those continued non-cash impairment charges, we can see that the book value of TTNGL has continued to decline from $21.43 per share down to its current level of $6.38 TT per share. Of course, with those commensurate or more than proportionate changes to its share price, we can see that from a price-to-book ratio, TTNGL is trading at a fairly relatively attractive valuation of 0.4 times from a price-to-book or market-to-book ratio. So again, at that price that trailing price of $2.70 per share, TTNGL is trading at that price to book ratio of 0.4 times with a negative earnings or loss per share. There's no available P ratio, and of course, there is that absence of dividends. So with higher profits from its underlying asset, PPGPL, as being one positive factor, with lower to stable energy commodity prices, and of course that continuing dividend uncertainty, Bourse is maintaining its market weight rating on TTNGL for the time being with a watch outlook. Turning very quickly to NEL for its 9-month period ended June 2025, the group would have reported a loss per share figure of 31 cents per share, which was a wider loss than the 23 cents recorded in that prior comparable period of 2024. So roughly a 35% widening of the loss relative to 2025. Dividend income, one of the main drivers from an operating perspective, down 56% from 110 million to 48.5 million. Operating expenses declined marginally, 2.9% from 4.8 to 4.7 million. However, operating income would have declined that 51.6% from 115 to 55.8 million. And of course, that total comprehensive loss widening from 140.8 to 185.5 million. Again, a 31.7% widening on account of impairment-related, non-cash impairment-related changes in the valuation of its investee companies. So when we take a look at the production landscape and pricing landscape for some of the key jewels in the NEL portfolio, we can see that natural gas production, based on available data, would have averaged just about 2.5, closer to 2.6 billion standard cubic feet per day, similar to the prior comparable period of October 23 to April 24, with natural gas prices increasing modestly. Natural gas liquids prices on weighted average basis relatively stable, as well as production at between 3.6 million barrels versus 3.4 in the prior comparable period. Ammonia as well, relatively stable in terms of pricing, as well as production, and LNG increasing just a bit from 9.92 million tons, or cubic meters rather, cubic meters, 9.92 million cubic meters to 10.41 million cubic meters over the comparable periods. And we can see broadly in the energy space of Trinidad and Tobago, domestic energy prices have stabilized relatively from August of 2023 to August of 2025 over the past 2 years, as reflected by the CBTT's Energy Commodity Price Index after spiking in 2022, of course, because of that Russia-Ukraine war, which led to commodity price spikes across the globe. So when we take a look at NEL's book value per share, we can see that similar to TTNGL, there has also been a decline, with NEL's book value as at the end of its 9-month period of 2025, just at about $4.13 or $4.13 per share compared to its current price. That leads to a price to book ratio of 0.5 times, which is pretty much in line with its trading value over the past several periods. So again, that price of $2.05 per share, NEL is trading with a negative earnings also, and no available PE ratio, which compares, well, can't compare it to the sector average of 11.1 times, with a dividend yield on a trailing basis of 8.3%, which is well above that sector average of 4.6%. Of course, with lower investee dividends or investee company dividends, that dividend yield may moderate in subsequent periods. So with that lower investee dividend income in mind and an uncertain near-term energy outlook, Bourse is maintaining its market weight rating on NEL for the time being, with again a watch outlook. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse. Email us at info@boursefinancial.com. And of course, you can check out our website where all of our research is absolutely free at bourseinvestment.com. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.